Good morning, ladies and gentlemen. Welcome to the HEIQ PLC results for the 6 months ended 30th of June 2021 investor presentation. Throughout the presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Just click Q&A, scroll to the bottom, type your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company review all questions submitted today and will publish responses where it's appropriate to do so. These will be available via your Investor Meet Company dashboard, and you'll be notified once they're ready for your review. I'd also like to remind you that this presentation is being recorded. Before we begin, we'd like to submit the following poll. I'd now like to hand you over to Carlo Gentonzo, CEO, and Zavar Hargendt, CFO of HEIQ. Good morning.
Thank you very much for having us today, and I'm happy to lead you through the interim results of HEIQ for the first half year 2021. Before we start with the high-level review of the first half year, a quick recap for everybody of HEIQ at a glance. We were created in 2005. Today we are over 200 employees. We have 14 offices with 7 manufacturing sites and 7 R&D hubs, and a total capacity of over 445,000 tons of chemicals that we can make. HEIQ is made out of 20 plus nationalities with over 35% female leadership, and has been listed on the London Stock Exchange since last December. We're a company that is very strong in the innovation and innovation powerhouse. We operate with 6 technology platforms, have over 10 patent families with over 200 innovations, 19 awards received in the last years for our innovation prowess. And we're also a differentiation company. We bring the technologies that we create from the lab to the consumers, and we do that with tech brands. We have 16 of them, and they are being used by over 300 brand partners worldwide, many of them Fortune 500 companies that are communicating the added value that we create with our ingredients to the consumers and confer a benefit to the product. If we also quickly look into what HEIQ's offering is, then we're creating 4 functions in 4 forms. The forms that HEIQ is promoting are functional ingredients, such as specialty chemicals, industrial biotech, but also functional materials downstream, like textiles and coatings, or functional consumer goods for the healthcare and personal care of consumers. Additionally to that, we have ingredient branding services and innovation services, and this is all deployed in the 4 functions of hygiene, of comfort, of protection, and of product and process sustainability. Now, 2021 first half year was an interesting one. The tailwinds that we have experienced are really confirming our long-term strategy. The mega trends out there is an improved awareness of germs, which is favoring hygiene and hygiene innovations, with today over 65% of polled people careful and more considerate about their health and their hygiene, and looking for ways to improve that. That's a never before seen number, and is a strong confirmation of our focus on the hygiene industry. But also global warming, especially heat waves that were experienced this year, are favoring our comfort innovations, especially the cooling innovations that we have on the market. Consumer trends have also supported our strategy. In pandemia, there has been a tremendous growth on the e-commerce, and that is favoring our ingredient branding. Brands want to communicate functionality online in order to have a differentiator, and we can clearly see that the more comfortable back to office apparel is looking for functionality in the online e-commerce channels by brands. Also, people don't travel that much anymore, so there's more disposable income, and they're investing it in home and home textiles, which is a strong growing sector for our focus of technology development. Lastly, the last years have clearly highlighted sustainability, and global events have supported that sustainability drive. So we see today a very strong demand by consumers for more sustainable technologies, which is another strong point for our pipeline. In summary, the increased demand on the market for our product offering is there, and our long-term picture is unchanged. However, headwinds. We have had significant challenges this year, and the supply chain is at the moment on a global level disturbed. We have an irregular supply of key raw materials that have happened in the first half year, and they have especially prevented one project that we had won, which is a 3 million per year program, which we hope will be able to materialize in the last quarter this year. Logistic costs have risen tremendously, up to 500% in the first half year. They have impacted 1.5% of our gross margin. And also on the raw material side, we've been fighting with price increases between 300 to 400%, which has unfortunately eroded 3% of our gross margin in the first half year. If we look at the pandemic impact, then lockdowns in the first half year in South Asia have resulted in approximately 1 month of sales loss for us. While countries like India have reopened, countries like Vietnam are still to date closed. So we see still a big problem in South Asia with COVID, especially we fear with the fourth wave, there might be more lockdowns in these key markets coming. Brand customers of ours have been delaying innovation projects. The supply chain disturbances don't help to accelerate innovations. We do see that resuming now, so we can conclude that the external factors that have impacted supply for us, but also our competitors, have been hampering the business, but we do believe they are short term. We expect them by mid next year to normalize. If we move into the financial performance review of the first half year, then we have achieved sales of 25.8 million. That's above the previous 6 months, which were 20 million, but we are behind the 30 million that we managed to score in an exceptional first half year 2020. The gross margin achieved 50%. This is 7% down from where we had been in the exceptionally strong first half year 2020, and is due especially to the external headwinds that we are facing with higher logistic and raw material costs. The EBITDA that we achieved of 4.8 million was above the previous 6 months, but again below the first half year 2020. Important to note is on the differentiation that we have more than doubled in the first half year the earned media mentions. That's a strong signal for higher perceived market and brand awareness of HEIQ, with over 7,600 media mentions in the first half year of 2021. And also on the R&D side, we've been able to enter 10 new R&D projects with 7 innovations that we were able to launch, 6 in functional ingredients and 1 in functional consumer goods, with more to come in the second half year. If we move into the revenue per function and form per first half year, and we look at the split of the 26 millions of sales in the first half year, then we can see in the graph in the middle, the yellow line, that pandemic has acted as an accelerator for the demand in hygiene functionality, and that we have been able to replace the spike that we had in the first half year 2020 with recurring customers. So that's a positive trend with since first half year 2019 over 600% growth in the hygiene functionality. We also managed to continue the high growth of product sales in comfort with 32% growth since the first half year 2019. And here we have launched 3 new innovations in the first half year 2021, which will turn into sales in 2022 and are very promising in our development pipeline, in our customer development pipeline. If we look at the blue line, our product and process sustainability products, that has been stable. It grew 9% only, and it is certainly the line where we are facing the strongest headwinds from the supply chain, as it relies on larger volumes in order to have an impact on our P&L. If we do look by revenue by type of goods, and we look at the functional ingredients, then you see that they're our dominant type, and that since first half year 2019, the category grew by 51%. We had a 28% growth compared to the previous 6 months, but we did lose out on the first half year 2020, which had this exceptional hikes that came in. We did launch in this time a new category of functional consumer goods, which has grown 25% in this first half year, and is very satisfactory for us in its current development. If we move to the next slide, I hand over to Xaver to walk you through our SG&A costs per half year, and also how we have invested in our sales channels.
Thank you, Carlo. If we compare the revenues of the first half year, not only to the first half year 2020, but have a look at the last 2 years, we see that we have a significant growth trend, and the first half year 2021 is 92% above the first half year 2019. At the same time, our SG&A costs increased by 51% on a normalized basis, and as such, our operating costs grow significantly slower than our revenues, and which is a very good development. In the first half year 2021, we invested 1 million into our growth strategy, and you see this is from innovations projects like Graphinix to sales channels, mainly in Asia. And the reported SG&A costs of 10.6 million include this 1 million, which we normalize as this is costs we have this half year, but from which we expect benefits in terms of sales and gross margin only in future periods. If we summarize our performance of the first half year, and we see that we have a very strong performance if compared to the second half year last year, and we see our strategy confirmed by the demand we experience for our solutions on the market. However, if we compare to the first half year 2020, which was an exceptional half year, clearly our performance is behind, and we have revenues that are 14% lower than this comparison period. Margins, as discussed by Carlo already, also suffered in the first half year of 2021 from the headwinds mentioned and the fragile global situation around COVID pandemic, as well as the supply chain disruptions. Also, as discussed, our OPEX increased as we are continuing investing in our growth and to achieve our midterm growth targets of 300 million. If we move on to the balance sheet, we see that we continue to have a very strong balance sheet with a net cash position and cash of 20 million, and coupled with a very low leverage. Overall, the balance sheet fluctuations compared to December are mainly driven by the 3 acquisitions we executed in the first half year. In the current liabilities of 24 million, liabilities of almost 12 million are included relating to the M&As, and amongst which most of it was paid in July, shortly after the balance sheet date, and a remaining portion is included related to earnouts to be paid in the first half year 2022. If we move on to the cash flow statement, I want to highlight the significantly improved cash flow from operating activities, which is up over 900% and achieves 2.9 million. As you can see, we invested significantly into working capital in the first half year 2020 as we had this exceptional growth in sales, and this year in the first half we kept our working capital rather stable. Our investing activities, where we spent 7.9 million, basically reflect the acquisitions as well as significant investments in our innovation pipelines, which amount to 1.3 million. And as mentioned, we end the period with 20 million in cash, a very low leverage, and as such as our continue to well positioned to execute our growth strategies. And with that, I hand back to Carlo to give you an update on execution as well as the outlook.
Thank you, Xaver. And I start with the acquisitions and an overview. We have conducted 3 acquisitions in the first half year. All of them have been to strengthen our hygiene product range, especially. The first one, HEIQ Crizal, saw us have the Belgian footprint established. That's an industrial biotech company doing probiotic, prebiotic, and symbiotic ingredients. And we have also the symbiotic home care and symbiotic personal care range that we have launched in the third quarter, which is an expression of the successful and quick integration of this outstanding company that has technology that will advance us strongly in the healthcare sector. The second acquisition saw us add on Germany, where we purchased HEIQ RAS, which has antimicrobial ingredients as well as nanowires. They're also present in the functional materials with master batches and coatings, and are offering innovation services to small to medium enterprises. The third acquisition established another complementary footprint for us with Thailand and Brazil, 2 jurisdictions where we are building up then our sales teams going forward, which is specialized on plant-based antimicrobial ingredients as well as master batches. All the acquisitions are performing and being integrated and are fully matching with the HEIQ values, and we look forward to a cross-selling and also joint innovation platform opportunities that are materializing. If we look on the innovation side, on the market side, and on the customer base, then on the innovation side, we have been successfully launching 7 technologies, 3 in protection in the first quarter, 3 in comfort in the second quarter, and 1 in hygiene. And as mentioned, we have launched 13 products from the symbiotic product range in the third quarter, and will launch another 2 technologies likely in the last quarter this year. If we look on the market side, then HEIQ Greater China, we did start out there in the second half 2019 with 2 employees. Today we have 20. We have in the last 6 months won very large Chinese brands such as Fila, Xtep, BLBM, and the number of customers in China that we serve has gone up in the last 6 months in the first half year from 92 to 236. So this is a very promising KPI for our investment in one of the core markets. If we look at the different markets where we can sell our existing technologies, then two to highlight: ICP in coatings, a strategic partner for paper and cardboard. And I'm very happy to announce that ICP has launched to market. See here a nice brochure with ICP coating on top, branded with ViroBlock, which is going out on the market in all kinds of applications for paper and coatings where consumers get in touch with the surfaces. A second strong partnership we managed to materialize with Lycra, which is a market leader in elastomeric fibers, where we have joint projects to promote HEIQ technologies to their existing customer base in combination with Lycra. And also that was launched successfully to market in China in September. Other markets that we have successfully entered are paints, our water treatments, laundry and detergents, as well as digital printing. So all these new markets are platforms on which we can build sales with our current product range in future. But the also important is the significant progress in the major innovation projects that we have been pushing. One of these major disruptive innovations that we're pursuing is highly porous graphene membrane, our HEIQ Graphenix platform. Here we have focused with the R&D teams on a first application in batteries. And I'm happy to tell you that we have successfully had a proof of concept for batteries that can be carrying 50% more energy density, that are much lighter and more compact than existing batteries on the market today, can charge faster and have a longer lifetime. We have filed successfully in the first half year a patent under PCT for this. And a second milestone that the team of Graphenix has achieved is to finalize the design of the pilot commercialization plant that we are going to build. On the other side, we have been focusing a lot on managing and creating a platform of technologies for hospital-acquired infections, as well as surgical site infections out of our hygiene range of technologies. These technologies that I'm presenting you here have been acquired through our M&As. This also shows the capability to move quickly technology to market with our acquired parties. One is an antimicrobial and antiviral coating that we developed for hard surfaces in hospitals to fight nosocomial infections. And another one, very promising technology platform with our German implantology partner AAP, is a coating to prevent surgical site infections. And I'm very happy to tell you that this coating has received approval by the German authorities to go for human clinical studies in 16 hospitals, which will happen over the next 18 months and could create the new implantology state-of-the-art surgical site infection prevention. We've been successful in extending the number of hospitals to 50 that are using the HEIQ SynBio Clean from the Crisal acquisition. I'm also very happy to tell you that we won the first large Chinese hospital, which is a good start with the Chengdu 8 hospital to enter the Chinese market with our technology platform. The USP of this technology platform is that we can reduce the hospital-acquired surface pathogens by up to 90%. And we are substantially reducing the risk of antimicrobial resistance, but also of costs for the hospital to manage infections of patients. If we have an outlook in the fourth quarter, what's coming ahead of us on the market out there, it's a little bit Murphy's Law. It remains very unpredictable. The value chains for us and our competitors are fractured. They are unpredictable. Asia is still in partial lockdown. China just issued a new energy consumption policy, which will lead to shutdowns of manufacturing facilities. So that will create more complexity in managing products, not only for us, but also for our brand partners, and will likely result in delay for some of their product launches. If we look at the supply chain upstream, then we do not see the transport and raw material cost decrease in the last quarter of this year. On the contrary, we think the cost will remain high until mid next year, and the availability will remain low. So our teams are really focused in securing the supply lines and serving our customers diligently. If we look at the macroeconomic landscape ahead, then the fourth corona wave is expected in the fourth quarter, And unfortunately, Asia remains still at a very low vaccination rate. So we do foresee that there's a risk of further lockdowns in the region, which will impact global economies. Increasing inflation is a sign that the costs are being passed on. On the other side, there's a risk of disposable income and less purchasing power, but this will have to play out over the next year. If we look at the customer news and highlights for the quarter that is ahead of us, we have with Ahava, a cosmetic company out of Israel, a very well-reputed brand, which has launched as first cosmetic player our pre- and probiotic skincare range, a clear trend in the cosmetic industry, which is opening this up for us with a very good marginality to play with the probiotic technology platform. The partnership with Lycra is successfully started, and we will work on print and pad, stretch and comfort with Lycra, with more than only one technology that we have brought to market going forward. If we look at the pipeline and the initiatives, then we have a major innovation launch still ahead of us. It will be the HEIQ Cool product range for the last quarter of this year. I'm also very happy that we can finally start 3 major projects that we have won. One that had been delayed for since the beginning of the year because of supply chain instability and protection with engineered floors in the US. Another one with our long-term innovation partner Haynes in the comfort range, and then, as mentioned before, the ICP coatings, hygiene coatings for paper and cardboard. In terms of strategic initiatives that we're pursuing, we still keep the global footprint expansion as top priority. The M&As are progressing well. We're integrating them further. The digitization is progressing, and we are investing in a group digital platform, and also are putting substantial effort into organization structure and processes for the group. If we look long term, then our strategy is on track. We are following with the positioning of our hygiene, comfort, protection, and sustainability functions, clear megatrends and consumer trends, and the demand for branded functionality is strong. We've demonstrated once again to be an innovation leader with 7 products launched in the first half year, and what will end up to be 15 in the second half year. That's an amazing and continued performance by our innovation teams to bring innovation to market. We did 3 complementary M&As. They additionally strengthen our innovation capabilities, but especially they did expand our product offering in hygiene. And we are in a very good position to become market leader in this hygiene field going forward now. Growth drivers for us are the penetration of new markets, as we have successfully started in the first half year, the expansion of our customer base and our geographical footprint, which we also diligently executed and are executing, and the growing brand equity, as you saw from the earned media mentions, which is more than doubled on the previous year, which is a strong pull for our brand equity and also for our functions to the brands. The disruptive innovations in our pipeline are always good for a big jump, and we are diligently executing on them. As you saw before, we strongly believe that we have technology that is superior and highly innovative for market needs. All this is backed up by strong financials, a very strong balance sheet, low leverage, and we are cash generative. And all this makes us very confident that our medium-term goal to grow from a 50 million to a 300 million company is unchanged and in reach. And with that, I thank you very much for your attention and open up for Q&A.
All right, thank you, Carlo and Saver. Hello, I'm HEIQ. I'm the head of corporate communication of HEIQ. I will be reading out the questions and directing them to the right answer person to answer. So first of all, someone asked, what evidence do you have for your products are increasing in demand and the use of your products is broadening? What are the leading indicators of future growth? Saying, for example, if customers are onboarding acceptance in market, if 15% of the textile market use HEIQ tech in 10 years, would that equate to sales of tens or hundreds of billions in sales for HEIQ?
Well, 15% of the global textile market on the chemicals, that's a 24 billion market. So yes, that would equate to a couple of billions for us under the belly, yes.
And what are the key indicators?
The key indicators are a clear trend that we see on sales of brands that are strongly moving on the online platforms. And on the online platforms, it is much harder to differentiate products, and the brands are looking out for stories and technology stories that they can, on benefits that they're conferring to their products, to tell to the consumers. So ingredient branding and online spouse very well and are a strong confirmatory consumer trend for an increased demand in our functionality. But also you have a very clear indication by consumers that they're looking more and more for quality again, and are making more conscious decisions, are looking for more sustainability content in the products that they acquire, and are willing to pay a higher price point. And when you pay a higher price point, you want to see a benefit. So that also strengthens the demand by consumers for functionality on what used to be just standard apparel that just sold by the looks. Now the function in fashion, or functional fashion, is a clear trend and a clear demand.
Thank you, Carlo. Next question. Can you elaborate on how the 12 million of outstanding M&A payments mentioned are being financed in the second half of 2021? Saver, your turn.
Yes, thank you. The 12 million can be divided into 7 million has already been settled in July for the acquisition of Life, and 5 million is the expected earnout payments next year. And out of the 12 million, 8 million roughly are to be paid in shares, and 4 million are to be paid in cash. And the cash is, the shares are newly issued shares, and the cash, as we have seen, we have on the balance sheet already.
All right. And question to Carlo: what are your plans for the graphene battery technology? Are you likely to collaborate with others?
Batteries is a very important field, and it's a very interesting field. We are moving right now into what we call JDA, Joint Development Agreement, seeking the right partner for our technology in this field to scale it up. So this is something that is ongoing by the graphene team and will be executed over the next quarters.
All right. Someone asked, appreciate the long-term strategy is on track, but with the near-term supply chain disruptions, what visibility do you have over revenues and profits for the second half of the year?
Well, the programs that we have are in place. The difficulty for us, and we're able to supply them with the supply chain management that we're doing. The difficulty is always when you are entering new projects and need to build new supply chains. So there is where we have in the first half year experienced the delays that have been pushed by these external factors. And this is where the world will remain uncertain. So we're diligently building up, and that has been a fortunate policy last year to have strong inventories, but we're also diligently building up different supply chain channels, and also we are manufacturing more and more locally, which is something that the structure of HEIQ with 7 manufacturing sites is supporting, because we can produce in continent and increasingly shorten the times, the lead times, which have been extended a lot, and also shorten or reduce the impact of logistic costs that are hitting us.
Thank you. Next question. During your IPO presentation, you have a lot of emphasis on a product called ViralBlock. Can you explain to us how this product range is performing? Is it decreasing because the pandemic is going to end?
Yeah, we anticipated this year in the forecast that we would have an inflection of the sales of ViralBlock, and that has happened within our expectations. We still had very good sales for ViralBlock going on, and us having taken the technology from an initially very textile and personal protection equipment focus and put it into coatings and detergents and paper and cardboard, has diversified the scope of the technology. So we're confident that the ViralBlock technology is and will remain a key component of HEIQ's hygiene range, who overall has been holding its growth and has been performing at the same level than the first half year, than the exceptional first half year of 2020. With the additions of our M&As, we have brought further hygiene technologies into this pipeline. So we really do expect to grow to a market-leading position in this field.
Thank you, Carlo. Can you please elaborate further on your geographical expansion plans, especially Turkey?
Yes, that's a very good question. And Turkey is a key textile market. It also has a lot of presence in production of hard surfaces. So it's definitely a target for us. Turkey was third on the list for us to invest further. We might anticipate it because we had to stall our investment in Vietnam. Vietnam is completely closed at the moment. There's nothing moving there, and the people that we had down there had to leave before the lockdown came into full action. So clearly, Turkey is on the list, and you can expect HEIQ to focus much more forcefully on Turkey, which today we're serving with a very good distributor of ours.
All right. The next question is a bit critical. Why has the share price fallen so much in this past 6 months?
I think the answer is, why has the share price risen so much at first? We felt very confident with us going out to market at the price where we were. We do feel very confident also with the share price that we have achieved in the short interim. It is an expression of the innovation potential that HEIQ has, and we strongly believe in this innovation potential with disruptive technologies that are in our pipeline. We're a long-term innovation company, and we really create tech that will make a difference on the market.
All right. How much revenue do you think you will permanently lose after COVID ends?
Again, we do not see that we will lose revenue in the hygiene industry. On the contrary, we're doubling up, and the hygiene industry is a core focus. We believe COVID is one expression of a hygiene problem. A much bigger problem for society is coming. It's the multi-resistant bacteria, especially in hospitals. research by the British Prime Minister shows that this will cause over 100 trillions of negative GDP going forward and 10 million dead people per year. That's much more than what COVID is causing, and the antibiotics are running out of steam. The multi-resistant bugs are growing, and that's also where we have identified an industry where our solutions will be in very high demand, and where we can contribute strongly to solve an urgent problem that is on a daily basis a concern for the healthcare industry.
All right. Next one is about our acquisition of Crisal. Could you explain about the new functional detergent you intend to launch or have launched for consumers? And can you talk to us about the entry strategy? For example, should I be seeing this soon down my local supermarket like Tesco, for example?
Okay, maybe not very soon in Tesco, because that is really not the specialty of HEIQ to serve the wholesale and retail market directly. But you will definitely see the HEIQ technologies being promoted as consumer validation over our existing market channels, sold to players that are serving Tesco, either with our brand or with our ingredient brand, HEIQ Symbio inside. But we will definitely validate our technology offers, as always, with consumers, and then hand over to our wholesale and retail partners validated technologies with validated and vetted claims that they can then one-to-one place in front of the consumer. So you will see probably in your Tesco and Sainsbury market, hopefully very soon, a HEIQ Symbio inside detergent.
Maybe I can add to that in my position in marketing. Since we are a Swiss company and we do have a lot of contacts in Switzerland, I must say that there is a very high interest from the local supermarkets in Switzerland on this product range. Although we can't disclose the timeline and whether they would go to market any soon. But if at all we go to supermarket, I would expect us to see ourselves in Swiss supermarkets before the British ones. All right, next question. How do you balance reinvestment into new areas and generating cash flow returns? And what's your strategy on acquisition integration? Thank you.
Yeah, okay, that's a difficult question. How do you balance? So it's we're an innovation company, and innovation requires investment into innovation. We are trying always to balance profitability and investments historically. How much can we do at the same time in pushing forward different technologies where we believe the megatrends and the consumer trends are supporting us? We've been doing this for a number of years now, very successfully, growing our product portfolio to now 200 plus products. And with the acquisitions, we just brought in many new ones. We definitely have, as we had announced and also taken up the resources when we went public, invested in further growth and further future and innovation. You saw that by the numbers that Xavier showed you before. We believe very strongly in keeping this balance of profitability and investment, and we have released in the first half year and this year the handbrake. So we're doing a lot of growth investments at the moment that will see a yield in the near future in us bringing innovation to market.
Next one. You've told us that your results have been affected by supply disruptions. Post-period, can you give us any light on what's going on and whether this will normalize for you?
That's really an industry problem. I mean, it's not only us fighting with this on a daily basis. All people in the industry are agreeing they've never seen something like what's happening today happened ever before. Clearly, then closer to a backwards integration you are, then better you are positioned. So that's then a strategic choice. Given this volatility in the market, do we want to backwards integrate more? That's a possibility for us going forward, which we are considering as a risk mitigation. We do not see the market conditions change in the next 3 months. On the contrary, they will remain very tense. The forecast from all the industry is that probably by mid next year we have a normalization that will happen. And this is the scenario with which we're working. So we have, like everybody, just stay on our toes all the time and be very diligent in managing the supply side of our business. In terms of moving forward, and also the integration of the companies that we acquired. The companies that we acquired, we knew for a long time, so they have very similar DNA, values, and also entrepreneurial drive than HEIQ. That's why we did them in the first half year. They have been capability adding to us, and they are very well integrating into our global structure, and we see cross-selling activities, but also cross-innovation platforms, exchanges that are very promising for creating novel innovation going forward.
Okay. The company remains very much a retail-owned stock. How do you intend to attract more institutional shareholders to the stock and story?
We will definitely hold more roadshows. It's always hard in COVID times to jump in a plane and do 2 weeks of quarantine here, and then jump in the next plane and do 2 weeks of quarantine there. And the online meetings only allow you to go that far. We will definitely look forward to have investor roadshows and build up the institutional platform of investors of HEIQ more. But we will also support more the retail side by a more active communication of our successes on the market.
All right. Next question is about SmartTem. There is heat wave this year. Do you sell more SmartTem?
Yeah, SmartTem sales are going up, and clearly the cooling side of technology request is strongly increasing. This is one of the functions where we do see a big opportunity for us going forward. It's also where we will launch in the last quarter the HEIQ Cool range, with very likely what is 2 products to market, where we are emphasizing this cooling function even more. So we're ready for the next summer season, heat waves coming, with solutions and benefits for the consumer when wearing textiles.
Yeah, just to add to that, SmartTem sales actually has up about 11% compared to the last 6 months. All right. Next question. Can you elaborate on gross margin by different products?
Well, the average gross margins of the 4 product categories that we are hosting or that we are offering, which are hygiene, comfort, protection, and sustainability, at the moment are around 50%. We do believe that our average target gross margin is at around 60% for these categories and innovations. This was all on track until the most recent headwinds hit us in what is a situation which is not seeing us in an easy spot to pass on all the increased costs to our customers swiftly. The changes just happen too rapidly, and our engagement with customers is more on a program base and has a certain lifetime of 12 to 18 months. We do have optimization potential, of course, going forward on the marginality. The more innovation we bring out, and that's also why we have accelerated the innovation pace. New technologies carry higher marginality. We will be able to correct the current average gross marginality to bring it where we want it to be and where we believe that our position on the market should be at what is around the target of 60% gross margin.
Okay. Could you please give a breakdown of the geographical segmentation of revenues generated and projected in the future? Do you have margin or plans to mitigate the current and foreseen challenges in Asia? Thank you.
Yes, so we have plans to mitigate. One of these plans is to be present locally more, and you saw the success story of HEIQ Greater China, which is an execution of that strategy. We have set foot into Sri Lanka, where we are extending the current team that we have in place, which will serve the South Asia market more. And now with the acquisition, we have a home base also in Thailand, and we're planning to put down more resources also into the Vietnamese market. So being in the market, if it's not in lockdown, facilitates your access and your presence, and will allow us to overcome the current difficulties that we're facing in Asia. This is an execution of our strategy that is progressing very well, where we do see the Asian markets being the key sales market for us going forward. Today, the Americas are still carrying the win with almost 40% of our sales. But Asia, had it not been for the lockdowns that had been experienced, would already be at 30-35% right now. We think that we will have this inversion between the Americas and Asia in 2022, lockdowns and COVID providing.
All right, next one. Do you think you can pass through some of the increases in cost to customers, raising prices, for example?
Well, we're doing that. We already did 3 rounds of price increases, and every time you're not very popular with your customers when you show up. The difficulty for us is that we have many of our programs that are positioned at brands, and the pricing level is fixed for that program with the brand and has a certain longevity. So we cannot just move into the mill, which is purchasing, and increase the price if the fixture was already there. So that's certainly a downside of our business model, to work with the brands in the short term, because we have less elasticity in our pricing in this situation. On the other hand, we do have strong marginality, and we're looking at the long term with our innovation. So we have taken some hits in this first half year, and we stick with our brand partners and our engagement, and we pass on the prices wherever we can.
All right. With the supply chain disruptions, do you think you suffer more or your competitors suffer more?
I think many of our competitors suffer more because they have more commodities and larger volumes. We are more in the specialties with smaller volumes still, so it's easier for us to cover the gaps. If you think of larger volumes at lower margin from competitors, and containers for a ship having gone up from $800 to $25,000 in 6 months, then you can see what impact that has on the marginality for our competitors. So it's definitely a tough time for everybody, and we do see our competitors increasing their pricing, or the price pass on to the customers on a regular basis, and we are following that with the industry where we can.
All right. HEIQ is an innovation company and is doing a great job innovating. Oh, thank you for that. How are you going to improve and accelerate your sales and revenues?
Well, that's what we have been doing, following, and you see that reflected in our SG&A, following us going public. We have invested substantially in our sales channel, not only with the M&As, but also with hiring more sales personnel, and are keeping doing that. So building a strong sales organization and a global footprint is definitely one of the investments that we're pushing, and on the short term, it has an impact on the SG&A. A salesman takes 12 to 18 months to bring something back. But we're very well aware of that, and we're diligently and strategically investing in serving the markets in which we have taken a foothold.
I was going to say, Carla Zava, HEIQ, thank you very much indeed for hosting the Q&A. We are just coming up to the hour, and you have answered, well, as usual, pretty much every question that we've had come through. And of course, the management team will be able to review all questions submitted. If there's anything further coming through, we'll be able to review those. We'll publish responses where appropriate to do so on the Investor Meet Company platform. Perhaps before we redirect the attendees to give you some feedback, Carla, if I just may just for a few final words just to wrap up, please.
Thank you. So I think I can wrap it up that we have had a very good going public, and that we have had a very good strategy to move into more markets. This has happened, and we have today a much better penetration in novel markets than we had in the beginning of the year. We've also been able to very swiftly add 3 M&As that are strengthening especially one of our offered functions, hygiene, where we believe there is a very strong megatrend that is underlying more hygiene demand from B2B and B2C going forward. We have invested substantially and are keeping to invest substantially into our innovation and innovation pipeline. And we are with more than 20 products that we will launch to market this year. Definitely one of the innovation leaders in the materials innovation space. All this is backed by us having strong financials and a very sharp and hardworking management team and employee group that is pulling forward our innovation on all the markets and is doing its best to support our customers with solutions and added value on a global scale.
That's absolutely fantastic. Thank you very much indeed, Carla Zava. Thank you for updating investors today, and thank you, HEIQ, for hosting the Q&A also. Could I please ask investors not to close the session, as you'll be automatically redirected for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete and be greatly valued by the company. I'd like to thank you very much for attending today, and on behalf of the management of HEIQ PLC, that concludes today's presentation. Thank you very much and good morning.